We see some reverse mortgages. We don't see a lot of them right now because most people, we don't deal with reverse mortgages until somebody dies. But once in a while, somebody gets a reverse mortgage. And if you don't know what a reverse mortgage is, basically it's an FHA loan, and the FHA will actually do a mortgage on your property, and they will give you a lump sum cash that you can use to live on, or they'll give you monthly income. And in either cases, all you have to do is service your HOA fees if you have any, and the taxes. And that's really your whole housing expense. So some people opt for a lump sum that they can use to live their life and take care of medical or help kids go through college, or just to live off that income in retirement. Or they can get $1,000, $3,000 a month, depending on the size of the property, and that will last forever until death. So it's kind of like life insurance in the form of a mortgage, and then that debt gets settled upon your death. When you die, your ears, okay, whatever it is, your ears, I think I'm saying that right.
Heirs.
Heirs, okay, ears, heirs. All right. Anyway, don't make fun of me. All right. Or go ahead, it doesn't matter. So the heirs have 12 months to sell the property, okay, and liquidate the debt. And let's say it's $500,000. They sell the house for 500, but the balance of the reverse mortgage is 400. Then the heirs get or the beneficiaries get the $100,000 in equity. Make sense? Everybody with me on that? Now, this is only for people that are 62 or older, and there are some other rules that go around that. But generally speaking, that's what it is. You still have to qualify credit. It's an FHA approval, that kind of thing. That's those of you that dabble in mortgages, will understand it better, but we don't need a more detailed explanation of it. So generally speaking, when you get a reverse mortgage, you intend to live in that house until you die, right? But sometimes, like we were just talking about, circumstances change and you need to get out. Maybe you can't afford the taxes. Maybe you got health considerations. You got to get somewhere. Maybe you can't stay in the house anymore and you need to get into an assisted living facility. Those are all scenarios, and there could be more than that. Well, in this case, in the situation Anatoly has, we got somebody who wants to leave the house. I don't know the reason. It's not important that they want to leave the house, but it's in property. And we see this in South Florida, especially in the condo market, where the values have come way down. Okay. So the values have come way down in some pocket of South Florida, and the balance on the reverse mortgage is more than what the house is worth. So if they were to sell it, it would actually have to be settled for less than the amount due. All right. Does that make sense? So technically, it's a short sale. You don't have to get all caught up in the lingo of what a reverse mortgage is versus a mortgage. The way that you approach it from a real estate agent perspective, it's just a mortgage. The only difference from our perspective is that as a mortgage, they're not making payments on the mortgage. They're receiving payment, or they received a payment for it already. So they're just not making payments on the mortgage, but they're not in arrears either. And so in this case, what do? How do you sell out of it? How do you solve the problem? And the short answer is you just treat it like a short sale. So you put it under contract, you submit it to the bank, and you ask them, there's probably a short sale application. You call the lender and you do it, and you simply negotiate it the same way as that you might negotiate a traditional short sale. And they'll pay you 2.5% as the listing agent. If you double end it, they'll probably pay you 4% to be able to get it done. If you split it with another agent in your office, you can get 5%. All right. And ask them to take a referral fee. There are different ways to carve that up, but that's the way it works.
Yeah, I've been dealing with a couple of those, three of them the last couple of years. And actually, the timelines are a little tighter. Most of those reverse mortgage notes have a due on sale clause within
That's
30
right.
days. And if the heirs notify the lender that they're going to list the house and sell it, they get 6 months automatically. Now,
Right.
you can get two 3-month extensions to get to the 12 months, but there's more pressure for the heirs to sell than just, hey, you get 12 months. There's going to be more pressure than that. That's all.
Right. They want to settle it,
Yeah.
especially if you have a situation where home prices are in decline still. You would just list it like a short sale. And I would do a short sale listing agreement with it. And then as soon as I had the listing signed, I would reach out to their bank. I would get a third-party authorization signed. I'd submit it to the bank. That would give you permission to speak to the bank on the seller's behalf. In the meantime, you can put it on the market, get a payoff demand, and submit it like a short sale. And then you submit it and you get paid. Okay. They just take time. You're not going to get paid in 2 months. It's going to take you 3-4 months to do. But the reverse lenders have a tendency to go much faster than traditional brokers. There's more mortgage because it's their money now. Okay, it's a little different. They're ready to go. You're going to have to demonstrate a hardship. Probably you have to explain why this person wants out of the house, but that's not too hard to do. Really, just tell them it's medical necessity. Probably is probably enough.